We've had issues on commodity exchange. We've been talking about problems and logistical problems about moving food from farm to market. The project, the technical team has been on this since January of this year. We are hoping that by the end of this year we should really begin go into project execution mode. We are engaging all the agencies of government that are involved in this process, and even if there's a delay, I believe that before the end of the first half of next year, we should get through with establishing it, so that we can unlock the potentials in the logistics of delivering food from farm to market in Nigeria. On NIFC is a novel idea. The Nigerian International Financial Corporation. Indeed, we started to receive interest in private sector companies that are saying they want us, that they have some land that can be designated as the free trade area, working with NEBSA. We have some in Abuja, some in Lagos, and some in some other parts that we're looking at. But we're going to think about which one is most efficient, which one we think is better and better serve Nigerians, and where the international community that this center is meant to serve, they will find it easy, expedient, and better for them to operate as a business that is operating outside Nigeria, even though they are sited within Nigeria. What that does is that it helps to improve economic activity in the country. It helps to boost flows of foreign investments into the country, and we think that there are tremendous benefits from this project, and that Nigeria, being the largest populated country in Africa, Nigeria being the largest economy in Africa, deserves to have an international financial center, and we are determined to achieve this. Uche raised some issues about GDP, congratulating us. GDP is good, looking good, and that inflation is trending downwards. Yeah, we're happy that this is happening, happening so fast. And you will all recall that as a result of the pandemic, the world went into a lockdown. This lockdown resulted in locking down of global economy, supply chains, everything were locked down. Nigeria, just like every other economy, went into a recession. During the second quarter of 2020, GDP was minus 6.1. Third quarter, 3.62. Fourth quarter, luckily, we escaped recession, and it was 0.1. Fourth quarter. First quarter 2021, 0.5, and second quarter 2021, 5.01. If you imagine the leap from below the river of minus 6.1, right, to minus 3.6, to positive 0.1, to 0.5, and to 5, means that a lot of work has been done that brought us to where we are today. But I must say that the 5.01% came primarily as a result of base effect that will dissipate. And that is the reason we are not going to make any promise that the rate of 5% is going to continue. But we will see to it that we end the year, like we said, our CBN estimate is about 2.86% average for the year. We will continue to do what we are doing that resulted in this more aggressively, and I would let you know some of those things that we have done. On inflation, we had almost close to about 21 months persistent increase in inflation rate, and went to as high as 18.7 or so. And from about 5-6 months ago, we began to see a deceleration in inflation rates, and by August 2021, it came to 17.01. One thing that is the deceleration in August 2021 was that we saw that both the food component and the core component both coming down. And it means that some of our interventions that were put in place, particularly in the area of food, is beginning to yield dividend. We are now entering the harvest period, hopefully, and we believe that inflation will decelerate further and more aggressively as we move towards the end of the year. But what did we do? I had read some of those things in the communique, but I'll repeat myself so that those who appear to be doubting Thomases will know that on the output side, what monetary policy said is that our objective is to primarily price and monetary stability, but that is so it's like a difficult one. If you want to stimulate growth, you have to spend. If you want to moderate, if you want to achieve price stability, you have to keep liquidity tight and do other things to moderate price and the rest of them. So for what sometimes you call objectives that are somehow conflicting in the opposite direction. So that's why we're happy that things are looking good and we would continue to do some of those things that we've done in the past. But I think, what are those things? We have aggressively taken actions that have boosted consumption and investment expenditure in Nigeria, particularly. Our targeted credit facility, where we give loans to close to almost about 500,000, if not more, of households and small businesses in order to stimulate consumption expenditure, is one good one. Or is it our AXMIS, where we are giving close to almost about 200,000 people loans to acquire business equipment, is hairdresser, is block making, or is somebody who is into poultry, or who wants to buy small agric equipment for him to be doing harvesting and threshing and the rest of them. These are all boosting expenditure, and that has helped to accelerate output growth in the country. And I'll give you a few numbers. For instance, 785 billion naira has been disbursed to over 3 million. I talked about it in another Dan Kobura program, cultivating about 4.7 million hectares of land. Okay. The bank also released about 900 billion to 256 real sector. I read it about out of at 1 trillion facility. 97.8 billion naira has been disbursed to over 103 healthcare projects, out of which 26 are pharmaceutical and 77 are hospital projects. Under our targeted facility, we've disbursed over 318 billion naira to 679,422 beneficiaries, comprising 22,000 households and 107,000 micro, small and medium enterprises. Under the electricity market stabilization facility, 120 billion has been granted as loans to 9 discos, as loans to cover their financial obligation to upstream market participants. Also under the mass metering, 36 billion has been released to 9 discos for the procurement of installation of 656,000 electricity meters. 252 million naira has been disbursed to 5 beneficiaries awarded grants. 7 billion has been disbursed for procurement and installation of 100,000 solar. Actually, more than 7. We're approaching almost 20 billion for solar business and the rest of them. So these are some of the things that we have done. So for me, no wonder that this is happening. But we will just, luckily MPC gave management the mandate that we should do more and more of this, so that we can see the direct correlation, because we can see direct correlation into output. Of course, on inflation, MPC also gave mandate that we should try as much as able to see how we can manage system liquidity in a way that there isn't excess liquidity that will create problem for the economy, particularly people who want to deploy liquidity into non-employment generating and output stimulating sectors of the economy. Will constrain them. Whereas we will continue to do our interventions in areas in the agriculture, in manufacturing, healthcare, that we believe will be employment stimulating and output generating sectors of our economy. I think I've tried. I want to thank you very much. Thank you. See you guys in 8 weeks. Then go and warn Aboki FX.
All right, and that is the conclusion of the monetary policy, the 5th Monetary Policy Committee meeting of the year. Just a concluding remarks there from the Central Bank Governor Gordon Emefiele, who answered a number of questions after holding all rates constant. This is a Global Business Report. Rosu Zorodiri here in Lagos. We're joined, of course, by Mr. Tilewa Adebajo, CEO of the CFG Advisory. Joining me, of course, to discuss what we have just said. Tilewa, you're very welcome. Thank you for joining us.
Good afternoon.
Your reaction, any surprise as to factors that the central bank considered in keeping rates constant?
Well, I think there was no surprise here. We all know they're going to hold the rates. There's nothing, as we've said all along, monetary policy is no longer effective in the Nigerian economy today. The only issue in monetary policy today is that issue of foreign exchange management. The main issue in the economy, the problem of the economy, has to do with the fiscal side of the economy. What was failed to mention was the ways and means financing. We understand that this is now close to 15 trillion naira. And it's important. I would have liked the central bank governor to address what they're doing to be able to resolve this solution of the ways and means financing, because it has become a significant elephant in the room. So that is very important, and it's important that we address those issues. Other than that, I think inflation, is on the downward trajectory.
Okay.
And I think that's positive news. And we've seen everything else they've done. He spoke extensively of the intervention funds.
Yes.
And definitely the central bank has done a lot in intervening in trying to stabilize the economy and to grow the economy. And the highlight is the fact that he says that with the harvest coming, food inflation should continue to decline. And hopefully they can meet their 12% target by the end of the year. And hopefully by next year, we should be able to go into the targeted inflation of between 6 to 9% on the corridor that they have specifically required. But all in all, I think there are no surprises in these pronouncements.
All right, thank you so much for that, Tilo. Let's put up those figures again. The MPC outcome for our viewers. The benchmark interest rate was held at 11.5%. Cash reserve ratio at 27.5. The liquidity ratio also held at 30% as well, and the asymmetric corridor plus 100 minus 700 basis points. Those are of course the figures there. For the MPC keeping things constant, no changes. I believe we also have a RISE business analyst, Bode Ososami, with us as well. Bode, wanted you to get your reaction. Also, the matter of foreign exchange. The central bank governor was pretty decisive in his comments on Aboki FX and a number of other issues, not recognizing the parallel market rate. Wanted to get your reaction as well to that.
Well, one really appreciated the detail in which he went to clarify the issues, at least their position. And I do agree the central bank should not be selling foreign exchange to bureau de change. The good news about creating an international financial center and hub in Nigeria is clearly highly applauded, but that will be complemented with policy revamp so that you can attract capital. And the digital naira is commendable. On Aboki FX, the central bank, of course, has more information on illegal manipulating of markets that analysts don't have. But what I gather is Aboki FX is not the driver of rates. It's the market. And any actions that destroy confidence in the availability of funds to meet demand will ultimately result in further increase in rates. So while there is no perfect market, we know that markets function well based on transparency and equal access to timely information, and that information has to be at the right time. And if you have an asymmetry there, it favors the powerful and the privileged ones. If people don't get information, those who are privileged will have an edge, which is why the SEC in USA and other jurisdictions have set guidelines requiring companies to provide all stakeholders equal access to information. Aboki FX is not a participant in the FX market. It's only an information portal. And of course, the absence of information will create distortion in the market. And moderating Aboki FX and other information portals will just stoke more opacity. But like someone said, I think the recent measures look like desperate measures to depress speculative demand in view of challenges with FX availability. And the bigger challenge is the scale of the gap between the so-called official rate and what people are ready to pay in the unofficial markets to get foreign exchange. So definitely, if the central bank has information that Aboki FX is manipulating the markets in this very unscrupulous manner, I think it should be exposed as quickly as possible so that markets can really interpret these developments more constructively.
Thank you so much, Bode. Tilewa, let me come back to you. There's so much has happened this week. You've already mentioned ways and means, which is, of course, the credit extension from the central bank to the federal government. But just today, I mean, there was the federal government announcing it's going back to tap the Eurobond markets for 6.2 billion. President Buhari, a couple of days ago, wrote a letter to the National Assembly asking for, I think, $4 billion and about 710 million euros. The debt picture, they're doing salami. His reports, on the state of the economy, talking about the 97.7% debt servicing levels. I want to get your take on debts, Tilewa.
Well, yes, like I said before, the central bank is in charge of monetary policy.
Yes.
And monetary policy has reached its limit in the Nigerian economy today. And the only way where we can get some relief in this economy today is on the fiscal side,
right,
which has to do with government expenditure. You've talked about the debt levels, which is what I've said before. Earlier in the year, I came on this program and I told you that our debt profile is now close to $120 billion. It's exceeded that. Why? You have not, apart from the 35 trillion that the Debt Management Office is recognizing, we have 15 trillion ways and means that we also have not accounted for. So by the time you add all this together, we're getting close to 50 trillion in terms of our debt profile. And at a point in time whereby there's 97% of our revenues going towards debt service, which is clearly not sustainable. And I think Mr. Doyin Salami has also, Dr. Doyin Salami, who is the chairman of the Presidential Economic Council, has also raised this alarm. And I think it's very important that we take a look at all these issues because focusing on the FX problem is there. Yes, foreign exchange is a significant part of the monetary policy of the central bank. And I think that is really today is its major challenge for the central bank. All the other issues, they're in control. Inflation, they've already started bringing that down. They've done a lot of work on the intervention side. So the key issue really is the foreign exchange. They need to have maybe FMDQ and the Nigerian, just as you have in NIBOR rates, maybe you need to have some sort of Nigerian banking FX rate that will be the standard instead of this Aboki rate, so that the Nigerian banks or the interbank offer rate, foreign exchange interbank offer rate, will be the ones that should drive the markets. And I think that is the direction they should go, because that's not very difficult. We have close to $30 billion coming in from the diaspora every year. If we tap this money and put it into the right channels with a transparent market, we should see some relief. So this whole problem of moving in from this rate maybe might be a challenge. But the key problem facing Nigeria now is not monetary policy. It's the debt profile of the country, the fiscal side of things, and how the government needs to address. Because with all the rising debt profile, the hidden debt, which we've not talked about, is the 15 trillion naira in the ways and means. If you add that to the profile, that is where you begin to see the challenges.
Thank you. I just want a quick follow-up. They did say they would securitize that ways and means, and it would be, I think it was, they said about 20, 30 years in the...
You have to look at the CBN Act.
Right.
It doesn't allow for securitization.
Ah.
That debt has to be paid for in the year it was incurred.
Wow.
So we need to look at that. We need to tread carefully there and look at the letters of the law. It says clearly there it doesn't allow securitization. The federal government needs to pay for the debt the year it was incurred, and it should not exceed a certain percentage, which is 5% of the previous year's revenue.
Right.
And we've exceeded all those limits.
Right.
So there's an urgent need for us to take a look at the ways and means financing and regularize it.
Thank you for that, Tilewa. But the central bank was declaring a win on improving the economy and I guess inflation. Tilewa has mentioned. I want to get your thoughts on that end as well.
Well, I wanted to just recap something that Tilewa said that's very important, and that is limiting ways and means support to what the rule says. The CBN, of course, is right to be focused on stimulating growth, and I think that is very important, and that came across in all the very bold and audacious interventions, and we heard a lot about that. But the scenario we may be saying is that the central bank may have underestimated the scale of the gap between FX supply from official sources and the demand, which is pushing buyers into the market, that black market that they don't want to recognize. And of course, they will be ready to pay whatever. And that's why you have the likes of Aboki FX coming up with these rates. If it's not Aboki FX today, to be somebody else tomorrow. But talking about the data, I must comment on something. If you look at year-on-year data, not just in Nigeria, but all over the world, it's distorted by two things: the base effect, and of course, that's because of the reduced activity and scope of error associated with the pandemic a year ago. So we must be careful. And what others are doing is focusing on the quarter-on-quarter or month-on-month data. Quarter-on-quarter GDP results for Q2 2021, if you recall, was a drop of 0.79% month. And of course, when you look at that, compared to, and also year-to-date growth at 2.7%. So you see quarter-on-quarter drop of 0.79%. That's quarter-on-quarter to quarter, the first quarter to the second quarter 2021. And year-to-date growth at 2.7%, which is at best tepid. Not the 5% growth compared to 2020, which I think is somewhat, I would say, debatable given all the issues I've just mentioned. Also, with inflation data, the monthly basis, consumer prices in Nigeria increased by 1.02% after a 0.93% rise in the previous month. So again, you see inflation increasing actually on a month-on-month basis. And the factors have not quite abated: FX, security challenges, structural bottlenecks, supply chain issues, transport costs. We all know. So while we need to support the statistics department to produce perhaps jobs data, and I think it's important we do get jobs data. Nigerians are fed up with the fact that we can't get jobs data on a monthly and quarterly basis. Whatever it's going to cost, we do need to get that data so that we can understand what really is going on with the two most important issues, which is jobs and poverty in the country. That's what people are interested in now. So it's premature, in my view, to conclude that the statistics point to a recovery that is remotely robust until we get this other data. And I think the MPC will also perhaps, if they look at this other jobs data, they may get some more ideas on what works and what is not working. The other thing, of course, is that the intervention schemes should be well audited for value, continually improved. Some may work better if passed through banks. And of course, if you assess them on impact on growth, on impact on poverty, impact on unemployment, there could be some low impact monetary expansion type things that are just inflationary leakages. So while the central bank has really done a lot, and one has to commend the activity, to be sure we get better value, they have to consider these things. Some have also suggested a tiered cash reserve ratio with different, say, higher ratios for the bigger banks for better monetary control and maybe to be able to get a more productive situation in getting growth in the economy while, of course, not getting into an inflationary type of expansion. So these are the type of issues. I think it's too early to say that these interventions are working, but that may be a minority view.
Yeah, so speaking of the interventions, I mean, the central bank did say that they've received about 8 million applications to their targeted credit facility, and they've doled out 400 billion naira so far. But I mean, 8 million applications is a lot. But Tilewa, just to piggyback on what Bode said, I guess your thought on GDP. I mean, 0.1% growth in the 0.5% growth in this most previous quarter. How, as far as where the economy is going, what's your take on growth? And I guess as we see out the year, like for example, the next quarter, now this quarter 3, it should remain positive. Yeah. So how do you see things?
Well, yes, like I said, there are green shoots in the economy today. Green shoots, and the recovery is fragile, and it is important that we sustain this growth, no matter how weak or fragile it is. The only challenge is that the unemployment and growth has been below the rate of population growth. That really has been the key challenge for this economy. So whatever intervention that we have, you've mentioned the intervention programs. The intervention programs are too credit focused. They're good. But I think what the central bank should start looking at now is equity-based intervention within the SME sector. It's very important. Not only debt, but also equity is important. By the time you put 200 billion naira into equity intervention, then you can stabilize a lot of the SMEs. Though a lot of the rates are concessionary, it's okay. So when you have these sort of, when you call fragile growths, green shoots, the positive aspect of this economy we're not talking about is that Nigeria already has like 3 or 4 unicorns now. And with that, you're seeing a frenzy of startup
just for our viewers, unicorns, of course, are $1 billion.
Yes, unicorns are $1 billion valued companies. Okay. So when international investors see this, you find yourself in a situation whereby right now, with Nigeria, year to date, has done close to $500 million worth of startup investments into the country. That really is where the positive side of this economy is. So what the central bank should do is to take a look at that to be able to create more equity type intervention in the economy into these sectors that are attracting close to $500 million from international investors. So it should be a sign as to that no matter how things are, there are a lot of positives within our startup industries. So by the time you're bringing in $500 billion into startups, that is equivalent to our foreign direct investment. So, it's a pointer that the central bank should look at. But like I've said, fiscal policy, is the issue today. Monetary policy has reached its limits. There's nothing else the central bank can do except manage the foreign exchange rate. Government needs to begin to restructure its debt profile. Government needs to begin to resize. You cannot continue to spend 97% of your revenues on debt service and continue to go out to borrow more. You still have not accounted for the ways and means financing, which is another 15 trillion naira of hidden debt. That is the danger of our economy today, and these are the issues we need to address. There's been an Ososami report. The government should review it, update it, make it relevant, and try to implement it, because what we need now is serious fiscal restructuring to be able to unleash growth in the economy. If we do not do that, we will not be able to sustain the growth of this economy higher than the rate of our unemployment. For us to resolve this problem in Nigeria today is very simple. If we grow the economy at 6% or higher on a consistent basis, the problem of inflation and the problem of unemployment will disappear.
Thank you so much, Tilewa. Bode, I'll give you the last word, about a minute to go. As far as the fiscal side, should they pick up the slack? Is the central bank or the monetary side, as Tilewa has said, reached their limits? Are they overstretched? Because the CBN is in agriculture, healthcare, all over the place. What do you make on the fiscal monetary balance, Bode?
Let me be very quick. Let's just liberalize the markets. There's such a thing they call in management as an activity trap. You just keep going on and on. You do more and you keep doing more and you keep doing more. And then you just come back to the same thing and you keep doing more. It's called an activity trap. When you have more administration, particularly in markets, it just gets more problematic, more rules, more administrative measures, more punishments, and so on. You don't get out of it. So I think liberalizing the markets, be it FX markets and, of course, indeed, other markets, is going to help us, even though there may be a short-term spike, maybe in rates and so on. When supply improves dramatically, you will see us getting the stability that we need to get. So in short, let's liberalize the markets and walk out of this activity trap that I think the central bank has found itself in.
Analyst Bode Ososami and the CEO of the CFG Advisory, Tilewa Adebajo. Thank you both, gentlemen, for joining us on this discussion. Post-MPC decision, again, for our viewers, all rates held constant.